this is the banana zone. So what happens at about this point in time, what we call crypto summer, we have this little shuffle around the all-time highs, and then everything just goes bananas. So I don't care whether this is tomorrow or in a month's time, because to Phil's point, the number about to go up.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. Raoul Pal, a well-known macro analyst and commentator, stands out as a distinctive voice in the digital asset space, setting him apart from others. Experienced analysts and well-known financial experts, Raoul provides a refreshing and positive outlook on the current macroeconomic climate, countering the prevailing pessimism that has affected the global economy in recent years. Some individuals have been expressing concerns about the rapid devaluation of fiat currencies, suggesting that it could lead to a global financial crisis. They argue that even strong currencies like the US dollar are at risk of losing their value. However, a former executive at Goldman Sachs offers a different perspective, suggesting that there is a potential way forward for the global economy based on two crucial factors. Productivity and demographics have remained stagnant in the developed world for more than a decade, hindering the potential for economic growth and the necessary increase in consumption to support additional debt. However, my friend argues that taking on more debt is the only viable solution to boost the global economy. Unlike those who believe a global collapse is inevitable, my friend believes that there is a sustainable path forward for the United States and the global economy. In a recent discussion focused on macro and crypto topics with Blockworks Macro, this viewpoint was emphasized. My friend shares his thoughts on the changing macroeconomic landscape and what he sees as the future of our current debt-based system. According to him, we are entering an exponential age where high-tech innovations are rapidly transforming every aspect of our lives. By 2030, he believes that innovations like AI and robotics will greatly enhance human abilities and boost productivity to such an extent that debt and GDP will no longer be a cause for concern. And lots of things Raoul Pal discusses, so please watch the video to end. And share this video and subscribe our channel Everyday Finance. Thanks.
The log chart over time keeps going up, right? The wealth keeps building. It goes from $1 billion to $10 billion to $100 billion to $1 trillion, right? It just keeps building. But your point is really crucial, is very little leaks back into the economy.
Right. And less, I think, if I listen to Fred Wilson, it's like, once you have a certain amount in the digital world, like me, I get scared, and I brought some back, some Solana back. I got scared. I sold some multi-coin. I'm a Canadian. Wasn't real to me because I wasn't using it. This time around, I'm playing with the stuff and the Stocktwits audience and meme coins and building on Solana. Why bring that money back this time?
So if I'm right that this is the fastest, largest accumulation of wealth in all human history, right? If it goes to 100 trillion, to JC's point, this is the S&P is worth $50 trillion, or the US stock market, entire US stock, that's 100 years of accumulated value.
It's mostly S&P, Raoul.
Yeah, it is. It's 100 years of accumulated value, and we're going to double that in a decade. It's like, this is la la land, right? The amount of money that's going to get made here is la la land. So what do they do with the money? I was speaking to a very famous hedge fund manager yesterday, and he asked his son this, and this guy's deep crypto. And his son is too. And his son's like 25, 26. He said, what are you going to do when you make your millions? He's like, well, I'll keep it in crypto. He's like, but when you take any money out, what will you do? He said, I'll buy property. And his dad was like, well, do you want to buy a super yacht or anything like that? He goes, no, it's a waste of money. So I'll buy property because it's an asset. When I first got into this space, it was because there was no transparency, and you don't own the money in your bank account, and you don't own the securities you think you own. And when you saw Lehman, you saw that there's a few collateral assets and there's all this leverage, and it's a big game of musical chairs for who gets a slice of the collateral, right? Nobody owns anything. Blockchain changes that because it's provable who owns it. You can give permission to rehypothecate them, or you cannot, right? So it's a game changer for that. But even in terms of trading, it gives you a whole new set of stuff you didn't have before. Like funding rates are just brilliant because you can see in real time what you'd have to get from a prime broker at Goldman, how funding rates for a particular stock are trading. But here you can see it in real time. You can see when it's liquidated. If you add that with a bit of technical analysis, you've now got a really nice system to figure out, okay, have we got another leg lower or is this over? Stuff like that. This is the banana zone, gentlemen.
Okay, so tell me what we're seeing.
Cycle, this is the banana zone. So what happens at about this point in time, what we call crypto summer, we have this little shuffle around the all-time highs, and then everything just goes bananas. So I don't care whether this is tomorrow or in a month's time, because to Phil's point, the number about to go up. And don't overcomplicate it. Everyone will overcomplicate this. They'll be looking at weekly charts, daily charts, hourly charts, tick chart. Just forget it. You should have a year plus to make a lot of money. This crypto market is the biggest gift retail investors have ever been given.
Yeah, you don't need a Bloomberg. You don't need Wall Street Journal. You don't need CNBC.
You don't need any. Don't need market timing.
Yeah, you
don't need to trade around positions. Don't need to get in and get out.
No,
you just.
The ongoing downward trend of Bitcoin aligns with the predicted lower target for BTC price by experts at 10x Research caution that this significant decrease could be just the start, as Bitcoin has the potential to fall even lower to $50,000. The recent drop from $60,000 to $50,000 is a notable change in market sentiment, according to 10x Research. They believe this shift is due to a decrease in buying activity and an increase in selling activity. Marcus Thielen, an analyst at 10x Research, indicated that the downward trend was predictable. Our data from early June already indicated an overbought market that was due for a correction. On June 24th, Thielen shared a chart projecting Bitcoin's breakout from its consolidation range and a subsequent decline towards $50,000. This projection was based on the potential realization of a double-top pattern. When the price reaches two similar peaks with a slight dip in between, a double-top pattern is formed. This pattern is characterized by maintaining support above a common line, also known as the neckline. This pattern usually resolves when the price drops below the neckline, possibly decreasing by the same amount as the distance between the peaks and the neckline, as we have observed over the past 3 months. Trading can be quite intricate, often characterized by numerous deceptive breakouts. In the past, retail investors have often been at a disadvantage due to the lack of knowledge and experience in the financial market. This has resulted in significant losses for many altcoin investments, unlike Thielen. Michael Vanni, the founder of AM & Capital, has a slightly higher potential downside target for Bitcoin. According to a prediction by BitPoy, Bitcoin is expected to drop below the May low of $56,000 in order to gather demand-side liquidity before declining further to $52,000. From a technical perspective, the price action of Bitcoin has formed a classic bear flag pattern, which is a bearish continuation setup that occurs after the price consolidates within a downward sloping range following a sharp decline. These flag patterns typically resolve when the price breaks below the lower trend line and drops by a height similar to the previous downtrend. This suggests that the lower target for Bitcoin's price is around $49,400, a level last seen on February 12th. Additionally, Bitcoin's daily relative strength index is currently oversold at 29, indicating the intensity of the ongoing sell-off and increasing the likelihood of Bitcoin reaching its bear flag target. Let's back to the Raoul Pal interview.
No, it's not. It's really simple. The ISM has gone above 50. It's the business cycle. So technology and crypto are driven by liquidity cycles. real assets, value stocks, commodities, they're all just the business cycle. And the business cycle's going up now. So these things have been playing catch up. They were dogs. Now, as the economy starts re-strengthening, these will do well. And so everyone got left behind because they didn't do anything last year. And now they should do really well. And they should do really well in macro summer, macro fall. So they should just keep doing well over time. They'll have periods where they'll outperform what tech did, because tech, went off to the races to start with. So I think it's very consistent. And bond yields are just a function of that too. If the economy's strengthening, then bond yields tend to rise somewhat. But the Fed can't let them rise too much because the Treasury needs to refinance all its debts. And we've got this massive debt payments coming up. So,
and you think it's as simple as that? You think it's just as simple as that? Just go with it.
But bond yields keep going up. Stupid. Commodities keep going up. Gold's breaking out of a 14-year base.
Silver just
I keep being told that rates are going to go down. I keep seeing rates going up. Bond market. Yeah. Bond market's been getting clobbered.
I don't have an issue with that. I don't think it makes much of a difference at this point. When the business cycle picks up, yields always rise. It's the economy, stupid. They're always the same with commodities. Commodities lead the inflation cycle, but 63% of all inflation is the super lagged owner's equivalent rents and wages. Those things lag.
Right, but that's the government. But that's the government data. I'm talking about the actual data, Raoul. For our entire careers, when stocks are under pressure, money flows into treasury bonds as a safe haven. But over the last couple of years, we haven't seen that at all. That's a major dynamic shift, no?
Because we've got trillions and trillions of debt to refi.
Oh, maybe. But we're seeing
4 years ago, we were all locked up at home. And I was doing Panic with Friends with Howard. Right? And we had the record amount of stimulus and government spending the world had ever seen. All of those interest payments are due. So, of course, the bond market's going to dislocate because you've got ridiculous supply. Stupid supply.
The Japanese crypto exchange, MGX, recently transferred a staggering amount of 472129 Bitcoin, which is valued at a whopping $2.71 billion. In its most recent transaction since May, the platform Arkham Intelligence reported the transfer of current prices to a new wallet address, as analyzed by Blockchain Analytics. The Bitcoin was transferred by the exchange at 12:30 a.m. UTC on July 5th from cold storage. The exchange is set to repay creditors this month, with a total of $8.5 billion worth of Bitcoin scheduled to be paid back. Multiple some market experts express concerns about the significant amount of Bitcoin that may enter the market due to the selling of holdings by creditors or from inaccessible accounts. However, other analysts try to alleviate fears of a large-scale sell-off by suggesting that the total value of Bitcoin likely to be dumped is closer to $4.5 billion. According to Alex Thorne, the head of research at Galaxy Digital, it seems that a significant number of Bitcoin holders may have a strong resolve to hold onto their investments. Thorne also pointed out the potential negative consequences of capital gains taxes for those who plan to sell all their BTC in one go. On May 28th, MGX transferred a substantial amount of $7.3 billion worth of Bitcoin to an undisclosed wallet address, which caused the price of Bitcoin to drop by as much as 9%. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.